Imagine navigating a stormy market, with unseasonal rains, global headwinds, but still finding these strong currents of growth.
Yeah.
That's really the story we're diving into today with one of India's leading FMCG giants, Dabur India Ltd.
Mm-hmm.
Our focus for this deep dive is Dabur's financial performance for Q1 of fiscal year 26, specifically the quarter ending June 30th, 2025.
And to give you the clearest picture, look, our insights are built right from their latest investor call, the official press release, and those detailed financial presentations they put out.
Right.
We've really combed through all of it to pull out the most important stuff for you.
Exactly. Our mission here is to kind of cut through all that data, extract the key insights, maybe some surprising facts, and definitely the strategic takeaways from these Q1 results.
Yeah, get behind the numbers.
We want to help you understand not just the numbers themselves, but the strategic why behind them and what this tells us about consumer markets and business resilience when things get tough.
So whether you're an investor just watching the market or maybe just curious how a big company like this adapts, you're going to get a real shortcut to being well-informed, hopefully with a few aha moments along the way.
Let's hope so. Okay, let's unpack this. All right, let's kick things off with a snapshot. Just the overall performance for Dabur in Q1.
Okay.
Consolidated revenue came in at Rs 3,405 crore. Now, that's up about 2% year on year. So modest growth.
Pretty modest.
Consolidated net profit also edged up roughly 3%, hitting Rs 514 crore compared to 500 crore last year.
Okay.
But what's interesting, I think, is that operating profit also grew 2%, actually outpacing that top-line growth slightly. And they maintained their operating margin at a pretty healthy 19.6%.
Right, and that margin maintenance is key. But what's truly insightful here is the context, right? This quarter was tough.
Yeah.
Dabur faced significant headwinds, not your usual stuff. We're talking unseasonal rain right in peak summer.
The worst time for it.
Exactly. And those ongoing geopolitical challenges, these things really hammered their seasonal portfolio, think beverages, glucose.
Yeah, the summer sellers?
Precisely. But here's where it gets really interesting. If you actually exclude that seasonal portfolio, Dabur's consolidated business grew by a robust 7% year on year.
Wow. Okay, that's a huge difference. 2% overall versus 7% if you strip out the seasonal stuff. What does that core growth really tell us?
Well, it's a powerful indicator, isn't it? It shows a very strong underlying core performance. It means even when external shocks hit their most, let's say, weather-dependent categories, the rest of their business, the non-seasonal products, they provide this really resilient foundation.
Okay.
And it's backed up, actually. They reported market share gains across, get this, 95% of their portfolio.
95%? That's huge.
It is. It really reflects strong consumer trust, brand resilience, even when facing those, unpredictable external pressures.
So how are they managing this? I mean, especially with those headwinds. You mentioned the rural-urban divide. Is that part of it?
Absolutely. That's a significant part of the story. For the fifth quarter in a row, host speaker, rural markets outperformed urban markets.
Fifth quarter. Wow.
Yeah, growing 390 basis points ahead. That's 3.9 percentage points in both value and volume terms. This sustained momentum in rural India is just critical for Dabur.
And are they just riding a wave or actively driving it?
Oh, they're actively driving it. They're really deepening that rural penetration. Look at the numbers. They expanded direct distribution by 63,000 new outlets.
63,000.
Reaching a total of 1.52 million outlets now, village coverage, up by about 10,000 villages, hitting 1.33 lakh villages. That's over 130,000 villages.
Incredible reach.
And that YoY network, their last mile connectivity initiative, it grew by around 900 members to nearly 20,000 YoDas.
Right.
So this sustained strategic focus on rural, it's absolutely crucial. The company itself calls rural consumers their growth engine. They're consistently delivering.
That's a massive network. It's amazing how a company this size keeps finding ways to go deeper. Okay, let's shift gears a bit. Let's dive into the segment-wise performance.
Yeah.
The hits, the misses, maybe some strategic shifts within their product lines.
Sounds good.
Overall, you mentioned the domestic business revenue grew 4.3% if we exclude that seasonal portfolio.
Exactly. So let's break that down. Home and personal care, or HPC, that segment saw a solid 5% growth.
Right.
What really stood out was oral care. Strong performance, 7.3% jump, led by their Big Red franchise.
Ah, Dabur Red. Yeah.
And importantly, their herbal products significantly outpaced the non-herbal ones. Shows a clear consumer trend there, gaining market share too.
Interesting. What about home care within that HPC segment?
Home care was robust, 10% growth, driven mainly by Odon, their air freshener, and Odomos, the mosquito repellent.
Right.
Odon actually became the #1 brand in air fresheners, 44% volume market share, gaining 1.83 percentage points.
Wow, number one.
And Odomos, double-digit growth, probably helped by the early monsoons, right? Gained over 2.6 percentage points in market share.
Makes sense. Skincare.
Skincare, also healthy, 9% growth. The Gulabari franchise did well. They even did a digital campaign with Karan Johar for their premium OxyLife facial kits.
Okay, trying to reach a different audience there maybe. And hair oils.
Hair oils really outperformed the category, gained 2.14 percentage points in market share. They hit an all-time high of 19% total volume share, and the focus there continues to be on premiumization.
So HBC looking pretty strong overall, especially home care and hair oils. Now let's switch to healthcare. If we exclude glucose again.
Right. Taking glucose out, healthcare grew an impressive 9%.
9%. Nice.
Chyawanprash, their flagship health supplement, strong growth, 28%. They ran a specific monsoon campaign that seemed to work, drove market share gains too.
28% is massive for a mature brand like Chyawanprash.
It really is. Honey also saw broad-based growth, 11% year-on-year. Strengthened its leadership position, gained a bit of market share, and their premium variants are catching on.
Okay. What about digestives? Hajmola, Pudenhora?
Yeah, digestives doing well. The Hajmola franchise grew 9%. And what's interesting is their new variants, Jacola, Limola, Mr. Arm, they now contribute 50% of the brand's sales.
Half. Wow, so innovation is paying off there.
Definitely. And the Hajmola soft chews apparently got a good consumer response. Budenhara grew 7%, helped by new campaigns focusing on acidity relief.
Okay.
And Honitis, their cough syrup, big jump, 46% growth, driven by demand surge during the monsoon. Health juices also continued strong, up 18%.
So it really shows how Dabur can adapt, right? The monsoon hit their summer drinks, but boosted healthcare products like Honitis and Chyawanprash. They leveraged it with timely campaigns.
Exactly. Product relevance and timely marketing.
Now, you mentioned glucose was excluded earlier. That was one of the misses, wasn't it?
Yeah, unfortunately, the glucose category got hit hard by those rains, declined around 30%.
Ouch, 30%.
Big hit. But even with that decline, it actually managed to gain market share within its category of about 1.18 percentage points, which shows, competitive strength even when the whole category is down.
Still gaining share in a falling market. That's something. Okay, what about the overall foods and beverages segment? You said seasonal impact was big there.
It was. F&B saw a mid-teens decline overall. Milder summer, unseasonal rains, the usual culprits this quarter.
Right.
But there's a definite silver lining here. A strategic bright spot. The premium real active range. Robust growth, 20%.
20% on premium juices. That's strong.
Very strong. And their coconut water in that aseptic PET format, exceptional growth. It's captured 25% of the fast-growing coconut water market already.
Quarter of the market, wow.
Yeah. And the real nectars and 100% juices also outperform their categories, gaining significant market share. Even the domestic Badshaw spices business grew in double digits. So again, premium and core brands showing resilience.
Seems like a theme. Premiumization, helping buffer the impact. Did they make any other strategic shifts, like exiting categories?
They did. As part of a strategic review focusing on core brands, they actually exited a couple of non-core businesses. Diapers and tea.
Okay. Small businesses for them.
Relatively small, yeah. Totaled around 8 crores in revenue, so 80 million rupees. It's about sharpening focus. They also flagged a specific localized issue in UP and Bihar.
Oh.
Yeah. A new small player apparently caused some market share loss for their L-Sale business there. They're aware of it and aiming to fix it. So they're looking at both the big picture and these, ground level challenges.
Good to see they're tracking those local dynamics too. Okay, let's pivot to the international side. You mentioned this has been a real growth engine.
Absolutely. Dabur's international business delivered very strong growth, 13.7% in constant currency terms.
13.7%.
Or 12.7% in Indian rupees. Solid performance.
Where is this growth coming from? Is it broad-based?
Incredibly broad-based, actually, which speaks to their global reach. The UK business grew at a whopping 41%.
41%.
Wow. Turkey, 36%. Namaste, their U.S. subsidiary, 30%. Sub-Saharan Africa, up 20%.
Strong numbers across the board.
Even more established markets like the MENA region, Middle East, North Africa, up over 10%. Bangladesh, also over 10%.
So connecting this to the bigger picture, this strong international performance, It must provide a good counterbalance to some of the domestic challenges,
A
right?
very strong counterbalance, yeah. Plus, you have currency depreciation kind of lapping over in most places now, which helps the reported numbers too. It really highlights the benefit of having diversified revenue streams. It buffers against those localized pressures we saw in India this quarter.
That diversification seems key. Okay, let's talk financial health and cost management. Inflation was high, around 7% in the previous quarter. How did Dabur manage that impact?
They tackled it pretty effectively, it seems, through a combination of things. Price increases, for one, averaging around 3–4%.
Okay, pass some of it on.
And various cost-saving initiatives. It really underlines their resilience, the strength of their brands, that they can take some price hikes without losing too much ground.
What about spending? Advertising, promotion, A&P?
Right, A&P. Overall spending actually went up by about 5%, which is ahead of their top-line growth, remember?
So they invested more despite slower sales growth.
Yes, but strategically, they shifted funds.
Yeah.
Less on ATL above the line, mass media ads, and more towards BTL below the line, things like consumer offers, trade schemes,
Why is shift?
competitive intensity. They explicitly mentioned it. Management also confirmed this wasn't due to any one-off factors. It's a deliberate, ongoing, strategic choice in how they spend their A&P money.
Okay, and how did all this affect margins? Gross versus operating?
So that competitive intensity, they mentioned Colgate in toothpaste and needing more BTL spend in hair oil that did lead to some netting off from the top line. It affected gross margins a bit. But the key thing is the overall operating margin was maintained, held steady at that solid 19.6%.
So they protected profitability, even if gross margin took a slight hit from promotions. What about volume versus price? How did that play out?
It's a bit nuanced. Consolidated volume growth in India was actually negative. Low single digit, around -1%.
On this one.
But, and this is the crucial context again, if you exclude that heavily impacted seasonal portfolio.
Right, the beverages and glucose.
Exactly. Excluding those, volume growth was actually positive, a healthy 3 to 3.5%.
Ah, okay, so the core business still saw volume growth.
Yes. Price increases averaged 3%, as we said, but net realization in India, what they actually pocketed after discounts and schemes, declined by 1.8%.
Because of that increased competitive intensity in BTL spend.
Precisely. So what does this all mean for you, the listener? It means Dabur is strategically balancing things, using pricing, using cost controls to keep profits stable even when competition heats up and inflation bites. They might sacrifice a tiny bit of net realization short term.
To maintain market share and protect the bottom line.
Exactly. They're playing the long game here.
Okay, the long game. Let's look ahead then. Did they give any guidance? What's the outlook?
They did provide some forward-looking guidance suggesting continued optimism. For the full fiscal year 26, they're anticipating high single-digit growth.
High single digit for the full year.
Okay, and for the coming quarter, Q2, expectations are actually for double-digit growth.
Double digit. Why the jump?
Mainly because they'll be comparing against a low base. Q2 last year saw a 5.5% decline due to some inventory correction they did then.
The base effect. Got it.
Right. Now, they do expect the beverage business to still see only low single-digit growth in Q2. That weather impact lingers. But other parts of the business should, as they put it, fire at double digits.
Okay, so expecting a stronger Q2 overall. What about margins for the full year?
They're working towards a significant improvement in operating margins for the full year compared to last year. That's the goal.
Significant improvement. Okay. And this ties into their broader strategy. You mentioned 7 big moves.
Exactly. It's all part of that long-term plan. Those 7 moves include things like 1, doubling down on core brands, the big ones, contributing 60–70% of sales.
Here come the winners.
2, contemporization and premiumization, making brands like Dabur Amla feel more modern, expanding new age hair oils, shampoos. 3, home care innovations like bigger value packs.
Right.
4, scaling up healthcare powerhouses, aiming to get brands like Kuna Health Juices, Hajmola, Shilajit to new revenue levels. 5, go-to-market efficiency, improving things for distributors, pricing.
Makes sense.
6, strategic M&A. They're always looking for acquisitions, specifically new age, high-margin targets in wellness, healthcare, food, beverage.
Building the portfolio.
And finally, 7, targeting low-hanging fruit, Prioritizing growth in areas like oral care, home and skincare, and hair care innovations, it's pretty comprehensive.
That is a lot of strategic pieces moving at once. How are they balancing this with, say, reaching younger consumers? Do they talk about that?
They do. Management acknowledges that, yeah, the new generation prefers newer formats, shops more online via e-commerce, but they also stress that right now that's only about 10% of the market.
Only 10%. Interesting.
So while they're catering to it, they're also actively modernizing their existing portfolios, bringing out new variants like we saw with Hajmola or Pudenhara for acidity relief, Honitis Hot Sip, trying to resonate with that evolving demographic.
Without alienating their huge existing customer base.
Exactly. It's about bridging that gap.
Which I suppose raises a really important question for a company like Dabur, doesn't it? How do you balance that deep-rooted legacy, you know, Ayurvedic natural health care with this necessary push into modern formats, digital engagement, to really secure that long-term growth?
It's a critical balancing act, yeah. It's something many established companies, especially those with strong heritage brands, are grappling with right now. Finding that sweet spot is key.
So wrapping this up, we've taken a pretty deep dive into Dabur India's Q1 FY26 results. We've seen a company that, look, despite battling some serious headwinds, unseasonal weather, inflation showed remarkable resilience, strategic agility too.
Definitely. Their focus on those core brands, the deep push into rural markets, and that strong international growth, it really kept them on a positive path overall.
It's quite a testament, I think, to the power of diversification and just adapting strategically in what's clearly a dynamic market.
Absolutely. And, Dabur's experience this quarter really highlights how external factors, things totally outside a company's control, like weird weather patterns or even small localized market disruptions can impact even the biggest players.
Yeah, it makes you think, doesn't it? What unexpected seasonal impacts or localized disruptions might be lurking out there for other industries, other companies that you follow.
Right. And what lessons can we maybe draw from Dabur's approach? Their diversification, their cost management, that continuous innovation, how they adapted and in some ways even thrived amidst the challenges.
And maybe think about how they're focused now on wellness, and these new age brands might be positioning them for whatever the next wave of consumer shifts might be. Something to mull over.